morning, my chief. It's nice to have you here.
Good morning, Mentor Sade. The pleasure is mine.
Thank you so much. I've been chasing you everywhere. So I eventually caught up with you, right?
We thank
So,
God.
so is it the busyness of NHS or is it you dodging me? Is it you trying to run away from me like one Peter and one Samuels?
Not at all, Mentor Sade, you know now. Anytime you call, we must show face.
You
Yeah,
much.
absolutely.
Yeah, I know you are one that is very passionate about nurses and our progress. And so we jump right into what is happening. And we want to say hi to all you guys watching us, listening to us. And we promise you have a swelling time with us. Nothing less than that. So, this very paramount issue, very important issue that touches the heart of everyone that wants to actually have a meaningful life in this abroad life that we are living is getting someone's own areas of abode mortgage. So that's
Yeah.
why you have to sit today because I know nobody can do it better than you. So we need you here to educate us. How do we go about it? What is your view about it? How soon should someone start thinking about getting a house? And what are the things one needs to put in place vis-a-vis credit ratings, credit scoring, getting advisors, getting someone to buy from the builders and all that? And what are the policies in place that could help someone? Are there things that will make it easier for someone to get into it in time? Thank you.
Yes, yes, absolutely. We need to get it right. So before I go into what is happening in the markets right now, so we talk about what the housing market, property market in the UK, how it is, what you can do generally before we come into what it is currently. So my name is Bemiga Peter Olubayo. I'm a registered nurse in the UK. So as you can tell, we are registered nurses. So we are just trying to help each other. So you will definitely still need to hear from a financial advisor. So anything we say here is not an advice. It's just for entertainment purposes and for us to, at least gain some understanding for us to run with in the first place. So having said that, so the UK property market, as you and I know, the major foundation is that the UK generally is a small island now, and they have this policy that attracts immigrants over the years, as you and I are aware. So a very small island that will always need people to either rent or own a house, and that is why historically house prices keep going up. Okay, and what that tells you is that if you jump in this year, if you don't jump in this year, by the time you are looking at that same property in the next 2 years, you might be paying thousands, tens of thousands of pounds for the same value you would have gotten many years ago. So that is how it works. Don't forget, the reason is this is a small island, a lot of people coming in, and they will definitely need somewhere to stay. But as immigrants, we also have to then look at how we can benefit from this. The background is that property value is expected to increase over time. Okay, so and previously, government have done a lot of things in terms of 5% help to buy was there before, which is no more. But generally, you will need about 10% or 25% in order for you to have an agreement in principle, get a lender to loan you an amount. So, but the mistake I see a lot of people making is waiting till when they think they are ready. So, even if you're not like you are ready now, it's always best for you to, speak to a financial advisor and ask them that, okay, this is my income. If you have spouse, this is my income, this is my spousal income, and they will tell you how much you are likely to lend you. Okay, so the reason why I made mention of that is that people then get to a time when they are ready. They were thinking that I would get a house of 350K, and they realized that a lender can only borrow them 200,000. So, and that puts you in a stress. You're like, oh, we can't get that house at this time. But there are certain things you could have done to increase your chances, such as 6 months before that time, you are probably doing a lot of work so that your pay slips looks like you are on top of it. So for both of you, you want to do lot of things. You want to, just get yourself in financial, in the shapes you want. But if you don't know, you don't know what you don't know. Okay. Apart from that, your credit rating, we can't overemphasize that. You want to make sure you are not applying for you're not borrowing 6 months before that time, and you want to make sure your credit rating is fantastic. Okay. I don't know if that is enough for a background now.
Yeah, yeah. Oh, you've touched very cogent areas. Just reasoning of why you are stressing so much on 6 months. Is there a cap, or is it not possible to have it lesser than 6 months? Will they have to go back and check all my income for the past 6 months and all that? That's what I really don't know. And when you
Yeah.
said we should be doing a whole lot of work, how do we do lots of work? Because we can't actually work more than 20 hours plus whatsoever we are doing for our employer. So how do we do the work so hard, work so much, and all that?
Yeah. So for the lender to consider any income at all, they have to have seen that it is regular income. So you can't just bring something you started having 6 weeks ago. They're like skeptical about it. So that's why 3 months at least, but I would say a safety net of 6 months. And
Mhm.
it just depends on what you want. Okay. So for instance, when we wanted a house, we didn't want more than what we own right now at that time. But even if we wanted more, nobody we lend us. But assuming we're looking for a bigger house, we could have done better. That's why I'm just saying that you don't want to wait till that time. So what it means at that time is that they might be asking you for a bigger deposit in order to cover for the cost of your borrowing. And if, for instance, why was I saying you could work and do some extras and all that? It's just so that you are maximizing the opportunity before you. We all know that 20 hours is for skilled worker, and for us in healthcare, currently until August 27th, there is no limit to how much you can work. But I think we can leave that aside for now.
Yeah. Yeah, thank you so much. So people should target the 6 months to play safe.
Yeah.
That's what you meant. Yeah, thank you very much. So some things that were helpful had been scrapped, like you said, the 5%, the is it ISA or LISA or whatsoever.
Yeah, help to
Are there,
buy ISA. Yes, help to buy. Help to
and
buy equity loan. Yeah.
are there other cushioning things that the government has provided for whoever wants to own homes at this point in time?
All right. So before we get to the questioning, what the government is doing. So without this idea, without government coming in, you will need a minimum of 10% of the value of that property. So if you're looking at 300,000 property worth of property now, you will need a 30 grand to convince your lender that you have that in place. Now, secondly, um, in the market right now, they are looking at people that don't have indefinite leave to remain. It has always been, it's just that it changes over time. Some of them want you to have stayed for 3 years so that you can even qualify to drop that 10%. So, but you don't know what you don't know. Like I mentioned, you have to, until you speak to a mortgage advisor, they can tell you what is in the market. You don't just think, okay, I can get. And I need to mention that usually the general calculation is that you can borrow 4.5 times of your income. So yours and that of your spouse, if you put them together, multiply it by 4.5, that is generally what the lender might be able to lend you. So that is what it is. Is either you have 10%, or once you have lived over 1 year in the UK, 10% to 25%, depending on the market of that time. Now, so what the major thing in town right now is a 0% deposit.
Yeah.
the
So we're
0% deposit.
discussed them.
And
So
uh,
what are the good things about this? What are the bad things about it? Is it advisable to go
yes,
that way, or should we just keep our fingers crossed till they will take away the zero deposits? Is there a time limit? Is there a time focus that that one is going
uh,
to lapse or anything?
honestly, the market is not looking good at all. And your this decision should be based on your individual, personal, and family circumstances. So nobody can tell you that this is right. Even the experts were wrong when COVID came. Everybody thought this is how it would be, and it went the other way. So nobody can tell us, especially where this market is going. But we can all imagine that house prices might continue to fall in as much as the mortgage interest rate is still as high as it is right now. So currently, the base rate from the Bank of England is 4.5%, meaning that you might not be able to get any consumer debt less than that 4.5. Recently, I think just this month, I saw someone that got a mortgage of 6.15%. 6.15% is a lot, if you ask me. So the issue on ground is not really the 0% deposit now. It's about the mortgage rate. The interest rate
Interest rates.
is just so high. So take for instance, I could have I will work that out and probably Mentor Shade will put that on the screen. So for instance, in my house now, I pay about 750, which was the same amount I pay for my rent. Okay. So now, if I were to take a mortgage at this time, I would probably be paying 1,300 or thereabout for the same value for the same house.
Wow. Wow.
So
Wow.
if you look at it, the question now is, are you going to be moving from a house you are renting for 750 into a house that you own, excuse me, and you are now paying 1,200? That's a big question, isn't it? So now let me now talk about the 0% deposit. So don't forget that we talk about 10% or 25%. Now,
Mhm.
meaning because the interest rate is high, the government, I want people to look at it this way. The government doesn't really particularly do things in the interest of the populace. It's usually for the economy so that things can balance. So it is just you now looking at yourself, where can you, what are the opportunity cost? What can you do for yourself? Yeah. Okay. So basically, the government is doing something so that house people can buy more houses, the investors will be happy, you understand, and the
Mhm.
economy is growing. Because if
Hmm.
nobody is buying houses, no houses are being built and they are there, people will lose the confidence in the UK economy. So you just need to know where you stand there. Now, the 0% deposit is for renters who can prove that they've been paying rent for 12 months, 12 consecutive months. So I know a lot of people who qualify for this. You've been in the
Yeah.
UK for over 12 months. You've been paying rent for over 12 months. In as much as you can prove that, the lender will be able to give you. Now, unfortunately, there is also a cap to how much this lender can lend you. The only lender I know about is Skipton. Okay, so now Skipton is the interest rate is 5.49. So that means that no matter how, if you if your credit rate is very good, the least interest rate you can get from them is 5.49. Okay. And unfortunately, it's not as though you will be the one to tell them how much you want to lend. They will look at your rent, how much you can borrow depends on your current rent that you are showing them. So if you this is official now from their own web page. If you pay a rent of 750, they will be able to lend you a maximum mortgage of 123,000. So Mentor Shade is already thinking she stays in the south of England. She needs over 300 for the house of her dream.
Yes, now and and I've not even saved 200,000. When I've not saved 250, they want, and
Yeah.
I've not saved 170. So if they want to loan me,
So so
if
so
they want me to remain in rent, I be, God forbid. God don't go see for them.
yeah. So
Okay, let's crack on.
let's say you are more qualified, you pay a rent of, you are the big guy, you pay a rent of 1,250 currently, and you can prove that for 12 consecutive months, they will be happy to lend you 204,000. Now, let's even say that is the situation. You are able to get 204,000. The rest has to come from somewhere else. The point I'm making is that um, all these things then limit how much you can, borrow, which type of house you can borrow. Where I live now, you don't want to buy that as a family of four, it's limited how much you can get. But of course, that depends. You need to go back to your financial advisor and ask them what. So that's why it's always best to ask them what is the best for you at the moment. Okay. And they might be able to even tell you that probably 0% is not for you. Now, I think, and the other thing about it, apart from paying rent for 12 months, you have to be over 21 years of age and you have to be a first time buyer. And apart from that, you have not mixed any payments, I'm sure, and you are not looking to buy a flat. So you are looking to buy a house, probably semi-detached or detached, terraces or whatsoever it is. So that is
Is
it
there a
about the.
maximum age that they don't want to lend to?
Not at all, not at all. The thing about age is that they look at the retirement age, which I think about 67, 68 or thereabout now for different sexes. So people need to check that out by themselves. So they look at, do you have 30 years or 25 years or 20 years, depending on how many years you are looking to borrow that mortgage for. So they look at the remaining years you have to retire. That is the confidence they have that you are able to work and you are able to pay back their own money. Okay. Now, let me talk about the pros and cons. For instance, someone might be in a situation where they are able to borrow that 123,000 we talked about before. Now, the advantage of this 0% is that number one, you're not putting down any deposit and you move into your own house, which is brilliant. Oh, we bought our dream house. There you go. You know, and if property happen to increase in value, you are going to gain that equity. So let's say that house you bought it for, let's say 150,000 now, and in 5 years' time, it has grown to like 200,000. Just let's say that. Now that 50,000 on top of it belongs to you, even though you have not put down any money in the first place, apart from the money you are paying back. Now, mortgage repayments might be cheaper than renting, but not in this situation. I'm so sure of that. And like I mentioned, you can build
Not in this
equity.
0%.
No,
This
no, not
situation.
just because it is 0%, but
It's
because of
because
the
of the
mortgage rate.
rates, of the interest
Yes.
rates, right?
Yes, yes. So, for instance, which we'll still do before we end this meeting today, we'll look at the difference between you getting a loan of less than 2% and if you get it about 5.5%. We'll look at the figures so that you can see for yourself. Okay, so like I mentioned, you can build equity without even putting down any money. Now, the disadvantage which you have to note here is that usually there are higher interest rates. But right now, I think if you're able to get that 5.49, um, the difference is not that much from those who are putting money down. Okay. Not like so much, probably £200 per month you'll be paying compared to someone that put a 5 to 10% down on their
That's
mortgage.
huge enough. That's
Now,
big enough in this UK. Oh.
oh dear.
That's more than what someone will earn for a night shift in one band six role in the NHS. You want to say that's not
Unfortunately,
big? That's big.
um,
Okay.
Unfortunately,
Mm-hmm.
unfortunately, that's the situation. Now, you might fall into negative equity. Now, this is a big thing because now the way it works is if you borrow, let's say 150 now, 150,000, and you are paying like that over 1,000 back to the bank, at the end of 5 years, you would own your loan will still be the amount you hold the bank will still be like 137,000. Okay. Now, meaning that you have only paid 13,000 back out of you the money because they call something amortization. Any
Okay.
loan that you take, when they say this loan is 5% or 1%, whatever, in the first few years, at the early stage of that loan, you are paying more interest than the capital itself. Okay.
Oh, okay.
Yes. So meaning that the amount you are owing the bank might still be reading like 140. You borrow 150, might still be reading like 147 at the end of the first year. And you'll be like, I've paid over 5,000. Why is it like that? So that is how it works. So now, if you've lived in this house for 5 years now, and
Mm-hmm.
your mortgage is still showing you hold 137,000. If house prices fall below 150,000, 137,000, which you owe the bank, you are in negative equity.
Mm. I guess
Meaning
that
that
was
you
what
have to
happened to someone I was reading a story on Quora. She was really
really.
sad. Yeah,
Mm,
that was, I think, briefly after COVID. Yeah, I
mm,
guess that was
mm,
what happened to her.
mm. Yeah, so that is the situation. You don't know what will happen next now. House prices will likely go down or at best remain the same, or it's probably going down
For the
because of
interest,
the
the interest,
interest rate.
yeah.
Because of the
Mm,
interest rate.
mm.
Now, um, and
How,
usually, yes,
yeah.
yes. So
So
usually, let's.
I was about asking that, looking at that, would you still
Mm.
counsel someone to go into getting a mortgage or just staying in their rent or whatsoever? Because it seems to me like it's a catch 22 or something.
Yeah, so unfortunately, you can't advise people. People do make decision because of many reasons. So it might
Yeah.
be the emotional as attachment of I own my house might be big enough for someone to say, I don't care. You say, bring 1,003, I pay it, and that's it. So, but mathematically, logically, it doesn't make sense to move from renting a house of 750 right now to if they sell that same house to you, you are now paying 1,002 plus. That is 500 over that same house you are living. That is over 6,000 in a year. You know, it doesn't
Then
make
you are
sense
still not the
mathematically.
owner of the rent. That's why I
Yes.
said it's like a catch 22 stuff.
Yeah, so the only way that might make sense is if, as we don't know, if house prices went the way it went after COVID. After COVID, before COVID ended, sorry, people were imagining that house prices might fall as we're looking at it. But don't forget that the mortgage rate was low, was less than 2% at that time. People were getting 1 point something percent, 1.55 and thereabout. So people were rushing back into the market. People moved from London because of people working from home. They came to suburbs and that increases house prices. You understand? So
Mm.
if we
It
see that
wasn't only
situation,
in the UK. I was reading about Nova Scotia too. I think houses used to be very cheap there, but this same
wow,
thing happened there, and houses
yeah,
are really so expensive now in Nova Scotia.
yeah, yeah. So it's everywhere. So if that happens, that's the point I'm making. If that happens, you would have gained a lot of equity. But logically, mathematically, doesn't make sense to be fair.
Yeah, yeah,
Yeah.
yeah,
Mm.
yeah. Thank you.
Yeah.
We are
Oh,
here.
yes, I was going to say something. Now, for instance, let's say I borrowed that money from Mentor Shade now, when we're
Yeah.
talking about negative equity. Let's say she lent me 10,000 now.
Yeah.
And I can't, even if I sell that house, I'm losing that 10,000. Then it causes fights between us as well. It breaks family and all that. There are just so many things attached to it. And people, I'll say, speak to a mortgage advisor. They will be able to get you the best in the market, and you can now look at the figures and make decision for yourself.
Hmm. All right. I do hope my people will take some great information home from what you've told us. Yeah, it seems like as people are desiring to get houses, there are so many things to really consider.
Yeah.
And the zero deposit thing that looks like a miracle, it does seem that the interest rate is about eating the miracle up. I think that's about the summary I have for you,
Yeah.
right?
Kind of. Yeah.
Yeah, but
Yeah.
then it still doesn't matter because people like us must own homes. So
Yeah.
we, so that's the position you've been in, that this will just be everybody's decision to make what they want for
Yeah.
themselves. Like,
Absolutely.
yeah, I want of course I don't want my PDs to deface the house, but I don't I want a place I can stay and nobody will come and say, oh, they put crayon here and so you are going to lose all your deposits. Things like that and a few
Yeah.
others. So thank you so
Yeah.
much. I believe it's a big eye opener to our people, and people will be able to make informed decisions on the issue of getting it at this point in time. I'm not sure whether there is a projection whether things are going to get better at any
Yeah.
point.
We are all hoping. We are all hoping that it will get better.
Yeah, we can't pray
Yeah.
for COVID again. We can't pray for any pandemics or epidemics or whatever,
Yeah.
because that seems to be what actually made it better at some
Mm,
point. So, but
yeah.
then we must keep hoping to be in good health. That's the best way to it.
Amen. Amen.
I'm not sure whether
Amen.
the Ukraine Russian thing is having impact on it too.
Yeah, it's affecting everything. Cost of living crisis, lesser disposable incomes here and there. Yeah. I think if you ask me, if you are going to go for it at all, you should only be considering this at this time if you are going to stay in that house for, let's say, a minimum of 5 years, because then time correction might happen. But if it's just like, so some of us, I know some nurses are registering to go to Australia, Canada, or whatever, you know, if you are going to leave, have to sell the house or do something with the house in a year time or less,
It's
it's
not advisable.
definitely probably not going to be worth it at all.
Thank you very much. Thank you very much. A lot of information to take home. We really
Mhm.
appreciate your presence and we'll be very
Mhm.
happy to have you again on the seat soonest.
Yeah,
So,
definitely.
yeah, before you go, do you have any counsel on how people can boost their credit scores or anything? Do you have a particular credit company they should get their cards from or anything?
Yeah, I think we live in an economy that doesn't recognize whether credit or debit. So they just want you to spend it. That's what makes everybody happy. But it's quite important that we all maintain a good credit score, because there is not for majority of nurses can afford to pay cash down most of the things that makes life easier here, like cars or whatever it is. So, and that is why it's important. And the way to boost your credit scores, you don't have to take a loan because you want to boost your credit score, because that comes with interest rate. But getting a credit card, for instance, where you have to pay in full every month. If you can't pay in full, don't even try it. So pay in full every month. So what that says on your leaves on your credit profile is that it shows lenders that you have credits that you have paid off over time. And before you know it, you get yourself in a very good and never ever miss payment. Once you miss payment, I think that stays on your profile for like 6 years. So you have to. I know someone that as the deposit was ready, but there was a problem with that a lender reported. He didn't even do it. It was just reported erroneously. If you do that, if that happens, you should be able to always check your credit profile as well. There's totally money. There is, just look at any of these clear
Let me
score,
come.
any of them. Look at your credit profile from now and then, like every 6 months. Just check, and some of them will even notify that there has been a ad search added to your profile. Always review when you see something like that. And when you are getting, I usually avoid buy now, pay later. It doesn't look well. It doesn't go well with lenders. It's better you get a credit card. You can even get a balance transfer, a purchase card that has 0% at start for some time. It's just better, and you try to pay it off before you get to that time that you won't be able to afford a interest rate. So yeah, I think that is what it is now, that I can say at the moment.
Thank you so much. Thank you so much for your time. I believe my people will really appreciate you for what has happened here. And you all see us soonest with our house keys coming to say thank you to Mr.
Amen.
Adebayo. Thank you so much, Peter. Thank you
Mm.
for your time. Thank you for giving the information. Thank you for the encouragement. Thank you for educating us. And expect us to rush into your YouTube and subscribe.
Oh, that would be great. We are hoping, looking for more
Hopefully,
subscribers.
you'll be able to accommodate all of us because we are really many. All right, see you. Bye.
Bye.